Hi, this is Ken Lake with a technical market update for Friday, October 15th, October 14th. The market extended nicely again today. I'm going to start with December wheat. I've added the oscillator bands here at the top just to mark the momentum in this market, standard deviation bands, that is. Anytime that we extend into these bands gives me a signal that we should be paying attention, should perhaps be considering sales. Notice that we did not get up into those areas. In other words, the wheat market has been trading pretty wide ranges for the last 3 sessions. So the close at 426 didn't necessarily give me any sort of a sell signal because the standard deviation is 438. So unless we get up into that range, it doesn't give me pause to want to come in here and make a sale. However, stochastics are peaking out here with the top number at 94. You see this thing starting to tip over a little bit. Only indicates that ends of the session we started getting a little weaker. So I'd be concerned going into first of next week as to whether this thing's going to tip over or not. And you know, typically we get 2-3 days up and then a day or two of correction. Fundamentally, we're still pretty weak. Waiting for data to come in to tell us how much or how many acres get seeded this fall. Current estimates are that overall wheat is down about 2%. Would be the lowest seeded acres for many years, but still not a big drop here. Would expect a major drop in soft red acres in the eastern corn belt. Locally, we think our crop would be down perhaps as much as 30%. So at any rate, we did have some sales of wheat, whether it's in DP or basis contracts today, and it's something to pay attention to. Switching over to November soybeans, we see that we did extend into those standard deviation bands up here at 974, at a close at 970. Market's approaching a little bit oversold here. Again, my concern has been the bearish crosses that we've seen in the last few weeks, but the 20-day moving average is starting to track the 50. You know, and if we get some more bullish input next week, then this thing's going to start turning a little higher, and I'll feel less bearish soybeans going into next week if we can still hold this 938 floor. December corn. Same sort of patterns, except that we have a bearish cross in here that we put in about 2 weeks ago. That continues to be supported with the 20-day moving average, and call it 340 as support, 347 support. But we're going to run into resistance at this 360 and 373 area. Farmers that need to make a sales or raise cash from a corn sale should probably pay attention here and do some of that. Also pay attention to the 2017 D's corn, 2018 March corn. It offers some hedges out there. March 2018 traded over $4 today. So those of you looking for a hedge in the 2017 crop should be paying attention here.